Okay, let's go ahead and get into the stock market technical analysis. We'll look at the broad markets, some individual trade ideas. We got some stuff going on in the markets today, so I definitely want to point that out. Please drop me a thumbs up as you're viewing the video. It just takes a second. I appreciate it. It helps the channel. And if you're interested in getting additional market insights, I've already put out a private member video this morning. There's the private member group. It's $5 a month. Link in the description below. Check it out. You can cancel any month that you want. So very low commitment. Again, link in the description below on that one. So triple Qs, this is our tech sector. So I'm just going to kind of cover the bigger picture. And I'll just run through it. All right, we have a higher high that was just recently made on the post-election pump right there. But that higher high came on, and there's their former high, and that higher high came on lower momentum. See the momentum dropping off? Look at the PPO. Let me zoom in on the PPO right there. See it's starting to cross down right there. So we have lower momentum, higher high in price. That's negative divergence. That tells me that we are very likely going to get sold into. And I put out a video yesterday saying that's exactly what I was anticipating. And sure enough today, sold into. Gap down and, selling. We're back below that former breakout. So there's your former high, which is about 503-ish. We pumped up there post-election, but that's now failed, and we're back below that level. So that tells me that's a false breakout, and we should see some more selling. Now we have hit support on the daily chart because you can see here, there's your low, there's support, and we're hitting that support. So maybe we get a little bounce here. I could see us bouncing back up to that 503 area as resistance. But in general, that should be the resistance now. So that's kind of what I'm looking at, resistance there at 503. There's also this bearish rising wedge, which, maybe we'll bounce up to 503 and then break down next week. Who knows? But in general, we've got a false breakout as of right now. Additionally, we also have what's called a island cluster top. So if I zoom in here, you can see we basically gapped up and gapped down. We created an island cluster top right there. So that's the top of the market until proven otherwise. When you get those patterns, those are topping patterns. The way you want to trade them is you basically can set your stop on a daily close above that island cluster top. So somewhere up here, maybe 517 or so, 517.50. Daily close around that level would negate that as an island cluster top. But if you don't get that, then this is the top, and it's typically a trending top, which means that it's usually marks the end or near end of long-term trends. And so the long-term trend on triple Qs, if I can roll out, is basically charts are a little slow right now, is a rally from the January 2023 lows. You can see there's our long trend, and there's our trend top. So that tells me that this big long trend is over and is about to reverse and change trend. And obviously we've got big negative divergence to help confirm that. So that's what I have on triple Qs. I think the top is in. Doesn't have to be. Maybe this island cluster top will be negated. But as of now, that's a top. Here's the SPY. On the SPY, bigger picture, and I pointed this out. Obviously, we had this bearish rising wedge with big negative divergence. We broke down, and the post-election rally was just a rally into resistance. I mentioned in my video yesterday that that was a very objective area to short. All right, and sure enough, from that level, we're down about 2.5%, and we should see some more selling. Okay, so we've broken down, and we back tested, and now we're being rejected. So I'm expecting lower prices on the SPY as well. Mag 7, Nvidia's, I feel like, probably the most important chart in terms of the tech stocks. And so nothing's really technically broken. Here's your former high. It's about 139.90 or so, and we're holding that as support for today. So technically nothing's really broken here. A breakdown of that should bring us down to the long-term trend line, which goes all the way back to October of 2022. Support. There's a reaction. There's one. And so a break of that, we should head down there. And then ultimately, we're still looking for a break of that trend line. Very key. The triple Qs is not going to go lower until we break that long-term trend line on NVIDIA. Meta talked about this as a sell signal. Yesterday, we did have a sell signal as we started to break trend. The market didn't really pay attention. It was pretty muted selling, but today, obviously, big down day in Meta. And, it's basically confirmation that that sell signal was valid. So, again, we have a bearish rising wedge, big negative divergence, and we had basically a breakdown in the last couple days. Next level of support, about 542, 543-ish. There's some support there. You probably get a bounce. But, again, the widest part of the wedge is our major target. You take that at the point of the breakdown. And, again, that's setting us up minimum about this 402 and possibly lower. Okay? So, Meta is on a sell signal. The semiconductors, SOXX. Now, NVIDIA is the major player here, but the rest of the semis are extremely weak. So it's just NVIDIA, basically. And so I'm expecting NVIDIA to sell off. Here's the semiconductors, SOXX. You've got support. Yeah, kind of support there, and a sell signal. With 30 minutes to go, that's a locked-in sell signal. I mean, it'd have to be one crazy rally in the last 30 minutes. You have to get back above that trend line. It's not going to happen. I mean, that would be a 3.5, almost a 4% rally in the next 30 minutes. So that's a sell signal on the semiconductors, which very likely will bring more. That's just the beginning. So we should see more selling. And then also there is this potential head and shoulders. You've got a shoulder, you kind of got the head, and then you got the right shoulder. So the measured target for the head and shoulders pattern, you take the top of the head down to the neckline, and then you take that at the point of the breakdown, which we haven't got, and that puts us down around 144-ish, right in there. I see some support down there, so that would be the major target where the semiconductors go. And again, if they get down there, there's also this longer-term trend line. It's kind of moved around on me, but it's down in that area. I've got it marked in red. So that is where I think semis are heading. And from now down to there, it's about 32% drop in the semiconductor index. So that is what I have on that one. Interest rates, the 10-year treasury, very important to watch. TNX, resistance, and resistance. A breakout above resistance will almost certainly be bearish for the market. So if you see 10-year treasury interest rates rising, that should be bearish. The only way I think they're going to fall from right here is if we see money moving out of the stock market and into bonds. All right. And then if that happens basically right now, so if we start seeing stocks selling off, you should see money transition into bonds, which will drop interest rates, and we would see this. So that could happen. Otherwise, if you spike up here, that would likely trigger the sell-off. So we either see a sell-off now in stocks and rates drop, or rates go a little higher, and then that would very likely trigger the sell-off in stocks. Some of these long trade ideas like NTR and MOS, they still look okay. You can see NTR still kind of hanging in there at support. It's not anything's really technically changed. We still have the big bullish divergence. Lots of patterns have kind of played out. I've kind of messed with some of the weekly charts. I do have a resistance line now here coming off the all-time highs way up here. And then you can see as I zoom in, resistance and resistance. So I think you almost need to take that out for kind of a longer-term buy signal. And then MOS, very similar stock. It's right in the middle of the wedge. We have this bullish falling wedge, big bullish divergence, but it's just right there in the middle of the wedge. So the way I treated it is I exited the trade right before earnings. It dropped pretty big because I did talk about how it could either break out or it could drop, but it hadn't broken out yet, so we didn't have any real firm buy signals, and we were basically up there near resistance. They dropped it down to support. I bought it back for a bounce. We got the bounce. At this point, though, it's kind of in the middle of the wedge, and it's just not objective because we haven't really broken out. So I took that position off, and I'm going to wait now to either buy it back down at support or a break of resistance, all right, which is the top of that wedge. So I'm just waiting on that one. Here's LLY, Eli Lilly, selling off. I did talk about how that got rejected at the 200-day just the other day, so I was expecting lower prices. And yeah, some support down here at about 730-ish, right down there. A little more downside, I think, and you probably hit some support and get a little bounce. Bigger picture, though, I mean, this one, the uptrend's broken, so I can see a lot lower prices over time. You've got a big uptrend line there. You've got big negative divergence. That divergence has started to play out. So again, I think we're going to hit that 730, probably get a one or a couple day bounce. But in general, I think we're going to take that out and head down to about 6.8. It's about 6.18 or so. And there's also this big gap to fill. The big gap fill down there, that'd probably be the final target on this move. To the downside, about 455. And, if this is down there, you're likely going to have triple Qs and all those other ones down quite a bit as well. Looking at the home builders, they're very interest rate sensitive. We had this bearish rising wedge here with negative divergence. We got the sell signal back on the October 22nd when we broke. And the major target for this wedge is the widest part of the wedge, and it hasn't been hit yet. It's way down here, down at like 105.72-ish. So that tells me that home builders still have some more to drop, and because they're interest rate sensitive, it kind of tells me that we're going to see a breakout on that 10-year treasury. We're going to break out on interest rates, and that's going to put like home builders into a panic, and we're going to see that strong move down. So just something to keep an eye on, and we haven't hit the major target in this XHB, so I could see some more downside there. Okay, I'll go ahead and get the video out there. NVIDIA earnings next week, so that's basically either going to make or break the market because of the weighting that it has. So probably going to just chop around up until those NVIDIA earnings. I think they come out on Wednesday. I have to double check. Let me pull that up real quick. NVIDIA earnings on Wednesday after the bell. So market's likely going to chop around until then. I'll get the video out and I'll catch you guys next week.